Okay, guys, welcome back again. It's still your boy, the Legend FS Academy. Like I did promise last on Monday that I'm going to be doing a top-down analysis. I'm going to be showing you guys how to do a top-down analysis all the way from monthly to day to 1 hour or 4 hours entry. And this is particular for a swing trader. I am sorry, it's just for a swing trader. Day trader also, you can also replicate, but it will be on a lower time frame. But I will not be going down to the lower time frame. My lower time frame will be 1 hour. So first and foremost, for you to understand a top down analysis. What is top down analysis? Top down analysis is just for you going on a higher time frame to see the bigger picture of the market, to see the overall picture of the market. And the higher time frame we have here is we have monthly time frame needed for swing trader. As you can see it here, the time frame needed for swing trader is we have monthly, which is the overall, where you check the overall market, overall what is going on the higher time frame, because a lot of fund manager, a lot of hedge funds trader, a lot of big companies, they capitalize on the bigger move of the market. So they intend to go to monthly to see the overall bigger picture of the market before they could be able to do anything. I will also be breaking it down for you guys, what you do on monthly, what you do on weekly, what you do on daily, and 4 hour and 1 hour mostly for your entry model. So once you've identified the overall bigger picture on monthly, you want to check the overall bigger picture of the monthly and check for how the candlestick has formed on the monthly. Then when you come to weekly, you want to check if there's any chart pattern on weekly. Chart pattern. Monthly is just for you to see the candlestick that is forming the candlestick pattern. Is there any morning star or any kind of evening star or any kind of candlestick that is forming, or are we having on bullish engulfing, bearish engulfing on the monthly? Once that has been confirmed, the weekly is for you to check for chart pattern. Chart pattern on weekly. Any chart pattern you see on a weekly is verified. It's verified and it's tradable and it will sustain for a long time. So now daily is for where you come to plotting your key zone, your support zone, your resistance zone, your supply and demand, whichever one, your trend line, your counter trend line, and your Fibonacci is where you want to come and plot your Fibonacci. No, you cannot plot Fibonacci on weekly or monthly, but on daily and 4 hours is where you want to come to plotting your Fibonacci. Those are what you do on daily, because those daily are the trend that is tradable. You cannot trade on the weekly or on the monthly, but on the daily you can trade daily. You can trade 4 hours. So those are the tradable time frame you can trade. Then on 4 hours, on 1 hour is where we execute our trade. Okay, with that being said, then what we need again is we need a trend line. I will also be doing that. A trend line is very important. And the second one, we need a Fibonacci retracement tools, which I will also be showing you in this video also. Then the fourth one is we need a counter trend line. And the last one here, we have a chart pattern. A chart pattern is let's say we are in a bearish move. Let's say we are in a bearish move. Let's say the market broke out of a particular high and the market is coming back to retest a particular high that has been broken, because it is initially a resistance. Once it's broken up, it becomes a support to it. So as the market is coming back to come and retest the particular zone now, it will now be giving you this formation, this formation here. Let's say the market broke out somewhere here and it's coming back for a retest. This retest will now look like this, a retest like this. Now we are in a temporal downtrend. Oh, I missed it. Let me do it again. Sorry, guys. Let me do it again. Let's say the market broke above a particular resistance and it's coming back for a retest, and the retest look like something like this. You see now that we are in a temporal downtrend. Now, for we now to consider to long this particular, let's say the market has gotten to this particular resistance here, where it will now become support. Let's say it did what we call stop loss run. For you now to confirm that this market now is ready to continue in its upward trajectory, we have to wait for what we call a chart pattern. A chart pattern confirming a weakness of the market, something like this, on a 4 hour. So something like this now will now give you the idea that okay, this temporal downtrend is over. It is time for us to start to long. So this is why we need a chart pattern, very very important, and a chart pattern with a support and resistance or supply zone in line with Fibonacci golden zone. Those are key confluence you can need to go long or short. So with that being said, let's quickly head over to the video. Let's dive into the video and do justice to what we have outlined here. So firstly, I'm on USDJPY, just a plain chart. So firstly, I want to go over to monthly to show you guys what I've explained. Now on a monthly, let me quickly, all this thing will be distracting me. Let me quickly move it up. Let me move it up so that it won't distract me. So now on a monthly, as we've said, we are coming here to look for a chart, a candlestick formation. A candlestick formation. Now on a monthly, you can see what I circled here. Let's say this market, exactly what I explained earlier, this market broke above this particular high. Remember, this is what we call top-down analysis. It broke this particular high may not be clear on monthly, but when you go to weekly, it will be clear. But it broke this particular high, and the market rallied up all the way. It rallied up. Let me give you an example. This is monthly. The market broke this high from here. It broke this high. Then it came back to retest this particular and here now becoming support. Then it dipped down. What it did here was a stop loss run, a liquidity sweep. So those who understand it won't be caught up by this particular dip. Then it dipped down. Then it gave us a candlestick pattern here. Then it shoot up again. But let me quickly show you guys the candlestick pattern that was referring to. So if you understand chart pattern well, this is an engulfing, this particular candle is an engulfing candlestick. Look at this one, this red bullish one, and we have an indecision here, which is doji, indecision. Then after indecision, this indecision now is confirming to us that this particular downtrend is getting more weaker, because compared to this bearish candle here, compared to this bearish candle with a full body that engulf even two months of this particular bullish candle, and we have another strong bearish candle here, very healthy bearish candle here. Then on the third one, we have a very weakened candle. It couldn't close below this, it couldn't close as strong as this particular one. Because why? The seller are stepping in, and the seller and the buyer, they were not struggling. At some point, the seller pushed the price to this particular wick here. And some point again, the buyer refused that this is the low you can never go. They push it back again up. The idea behind this particular doji, this particular indecision candle is that the buyer and the seller are struggling. They don't know where to push. They don't know where to take the market to. The seller wants to go and the buyer wants to go. That is why you always have this long wick and upper wick and this center body here. So after this indecision candle form, we have and what we call a bullish engulfing candle. It engulf this particular thing and close inside. Let me say 80% inside of this bearish candle here. It has been confirmed that this candlestick pattern has been confirmed, because the principle states that it must go at least 50% of the next candle, but this one has even gone above the 50%, and it has closed even up to 80 or 70% of this bearish candle here. So, and we got this engulfing candle. On seeing this, if you understand the principle of top-down analysis and candlestick pattern, how it works, what you have to do is you have to wait for weekly to see a chart pattern occur. Because on weekly, this market is coming down all the way from here to be giving us a lower low, lower high, lower low, lower high formation. But on getting to this particular resistance now, with that turn to support, now you will be watching for a chart pattern confirming that the temporal downtrend is over. So now, getting this, always do this, check the candlestick pattern on monthly, then let's head over to weekly. That is why I circle this. Then on weekly, you can see that all the way from here, if I'm to adjust this properly, or just to adjust it properly, but let me just leave. I wanted to adjust this line here. I wanted to adjust it because this is a weekly. So let me clone it because I like my charts to be so clean whenever I'm doing analysis. Let me just put it like the hem. Always use boss because support and resistance is not a line, is a zone. So now on weekly, the market, you can see the way the market broke up to the upside. You can see it broke up, and when it was coming down, this was a temporary downtrend, and the market was just making lower low and lower high coming down. So on seeing this, and already you've known what is going on the monthly, what you have to do now is to come down to your day weekly to see if there is any chart pattern. Remember, this is a swing trade, and all these things will not just happen in a twinkle of an eye. It will take time, so you have to be patient. So you have to now wait for a particular chart pattern to confirm, and which we've gotten here, which is this W pattern. This pattern is a reversal pattern. If this market wants to continue, it wouldn't have given you this pattern, but it gave this pattern, and the market shoot up all the way from there. So the market, the moment it gave the pattern, it move up, and it confirmed properly. This is a best confirmation for any swing trader to capitalize on and eat from the market. So it confirmed properly. It broke first time, retest, went again, come back for second retest again, and shoot up. So this is a lot of pips. So now getting this now, okay, we now have a chart pattern on weekly. So what next? The next thing is now to switch over to daily. Let's go back to where we are. To switch over to daily now, we can now say, okay, let's now look for a trend line. Can we draw a trend line? Yes, we can draw a trend line, although it may not be a perfect one, but at least we can still draw a trend line. So I'm just doing this thing so that you can be able to replicate it on any chart. Although the trend line may not be a perfect one, but at least we can draw a trend line from here to here. And you having this understanding of the monthly and the weekly, so now you have this confidence that the big boy is pointing up. So now you can see the way this guy is going up, the way this guy is going, you can be able to capitalize on what you have understand from the monthly and the weekly. So now the way I trade, I always wait for a counter trend line break, which I couldn't find here. Okay, let's quickly go back to daily. Let's see where we can be able to, if we can be able to get our fib zone. Let's go back to weekly because USDJPY is not really giving me the chart pattern I needed as of where I started doing this analysis. So assuming I went back further, I could be able to see where I can put my fib zone. So there's no exact where to put my fib zone. I wanted to check if the fib zone can align, because not all the time, but when a fib zone presents himself, is a good time to capitalize on it, but not all the time. Okay, you can see that on this from swing low to swing high, where the market stopped initially, you know how to draw your fib zone. I've done a video on that. You can also watch it. You pick from the swing low, you release it to the swing high, from here to here. When the market pull back, Fibonacci is for you to capitalize on when the retracement will be over. That is why it is called Fibonacci retracement. So the market came to this particular 0.50% zone, and inside this 0.50% zone, we also have a trend line there. We also have a trend line there inside here, 0.5 zone. The market gave us a reaction there. So now, if you've done this and you already know what weekly and daily is saying, and you can be able to say, okay, you can comfortably go long upon seeing this particular move here. Because again, on this particular trend line again, we still have what we call a chart pattern. It is very important for you to understand when this guy was coming back for the second leg. This is the second leg of the double bottom that was formed on the weekly. This one is the first leg here. And this one, the first leg also, there was a chart pattern. Confirming to you that this temporary downtrend is over. Those are the key principles you have to be paying attention to. Then when this guy was coming, then he got to this particular trend line. Then he gave us a chart pattern. and a chart pattern, it confirmed it broke above this particular one here, then it came back for a retest, and you can see that the moment whenever he tap into this trend line, he always gave us a chart pattern, and once he gave us a chart pattern, it always rallied up again. So it always rallied up again. So those are the key principles you have to be waiting. We're still going to 4 hours to fine tune our entry. So on this particular trend line, we have a fake out here. There's what we call inner trend line and outer trend line. On this one, you don't necessarily need to delete this particular one because it has not violated the principle of trend line. The principle of trend line states that until a candlestick has broken far away from the trend line before you can delete it. Hence, it's still valid if it has not broken far away from it. As long as this market has not gone far away from this particular trend line, is still valid. So what you have to do, instead of you to delete it, what you have to do is for you to draw another trend line. Put in here, get in here, then you connect again. Since it is a breakout, then you connect again. First touch here, second touch here, and on the second touch, the market rallied up, and you know the principle of trend line is stated that the third touch of the trend line always does the trigger. Then on the third touch, the market came again, and from there it rallied up. Let me quickly delete this one and show you something on the 4 hour. 4 hour is always where we will look for our entry. Let me quickly then cycle this one. Now we know that we are on a trend line. So now how do we get in? First, we've gotten our chart pattern. Then the last but not the least is how do we get in? Let's quickly zoom in and get where we are. Okay, now we are currently there now. So now how do we get in on this particular chart now? So you get in with me. I always get in with, oh my God, it's like my network is messing up. Let me quickly go back to it. Okay, we are back. Sorry guys, it's a little bit glitch from my network. We are back. So how do we get in? Me, I always use 2 entry model, which I've taught on my channel. You can also watch it and get it. I'm sorry guys, I will get my laptop done by this next week so that I can be using my laptop again. I told you guys I wanted to get a mic and my laptop screen got crashed. So since then I've not been able to repair it. But I will get it done maybe ending of this month because this phone is stressing me. It's not giving me exactly what I want. So this is the first listing we've gotten. This is the first one we've gotten from the daily. So now you can, if there's any chance for you to put in your counter trend line somewhere here, you always connect from the week, from the up to the down. Yes, you see, if you are to take this trade now, this will be your entry model. I'm sorry guys, this will be your entry model somewhere here. Your stop loss come below this particular second counter trend line because anything that makes the market to come back again will invalidate this particular setup here. Then you can target as a swing trader. Once you've checked your overall higher time frame, you cannot target any of the bigger move. I mean, I love to capitalize on the swing of the market because that is where the money is, and that is how the big boys trade, and that is the lane I want to follow, a swing mindset. So this will be your first entry here. So now we can still have this second. For those of you asking me about the video about the counter trend line, this can also serve as that video you are waiting for. This is another perfect counter trend line also. Your entry model should also look like something like this. Although this particular, when there's a long week like this, what I intend to do is that I intend to wait for a pullback. But for some aggressive trader, which I really don't recommend, your entry model should look something like this. But I really don't recommend it. Once you have let me delay this because I personally I wouldn't have entered this trade, so I wouldn't advise you guys to enter this trade on breaking of this counter because why? It is too long. It is too long. If it is something short like this, yes, it is fine. But whenever it's too long like this, what intend to happen is that intend to widen your stop loss. So what I have to do is that I have to wait for a significant pullback, and that pullback did happen here. You can see that the market rallied up from here. No way, it didn't give you any sign to even enter. It rallied up, leaving all this space here, which is called the fair value gap or the inefficiency, however you like to call it. Leaving all these spaces here. And once I've been able to see all these spaces here, I know for a fact that the market don't like space. The market will definitely come to fill this space. Assuming the market is moving in swing, something like this, it will give you a room to enter. Assuming the market is moving in swing like this, when the market is doing like this, it is nice for you to enter at any point in time without having any doubt or fear that the market will collapse, because it will be hard for the market to do like this. If the market is in a strong uptrend, what you intend to be doing is like this. But this is the exact way the market normally move. But when we have this particular move like this, what should come to your mind is that as long as the market left, let's say we have something like this, so all these spaces here now, the market will still come back to fill it. I'm coming. All this space here now, the market will still come back. We have this zone here now, so the market will still come to fill all this space you are seeing here, because the market don't like all this space you are seeing. The market will still come back to fill it, because the market don't like space. All these things are gaps, fair value gaps, and the market don't like it. Market don't like inefficiency. Market move in a swing, just like this particular one now. So when you have this, you can comfortably enter, and at the pullback you enter. The market move again, break structure, come down again, you can enter. But when you have something like this, bear in mind that surely the market must surely come back here to come and fill up this space before it goes up. So understanding the difference between the structure of market, the way the market shoot up, and the way the market is moving in swing will give you an idea for you to wait. So let's go back. That is why I explained this particular move to you, so that you can be able to understand this particular move. This is just a rallied up, leaving all these spaces here. So the market later came back to fill all these spaces here, because all here was filled, but here, from here to here, was not filled. So the market has to break down, fill all this space here, and then move up. You can see the difference between this one and this one. This counter trend line break and this particular one. When the market shoot up here, the market didn't just move. The market was going covering space. I wanted to use a part, but let me just use it. Rallied up, pull back, was just moving in swing. So it was just covering space. So upon seeing this, you know that any particular pullback, you can capitalize on it. If there's no fair value gap or inefficiency, you can also be capitalizing on it and be buying. But if there's any fair value gap or inefficiency, you have to put your bus there and wait for the market to fill in that space. So the same thing happened here again. Now we are on 4 hour. I'm sorry, I may not be able to go to 1 hour because this video is getting too long. The same thing on 4 hour. On 4 hour also, you can also draw your trend line like this, although it may not be a perfect one. So on breaking this particular zone here, you can see that it broke it. It was perfectly okay. If I'm to enter this trade now, these are the sweet trade I love to enter, but it doesn't always come. It doesn't come always, but once in a while, once it's come, you can capitalize on it and make some good money out of it. If I'm to trade this, it would look at how my trade line would look like. Then I come to adjust my stop loss to a low of this particular. So this is how my trade will look like, a swing trader. But sometimes I intend to refine my stop loss. If I'm comfortable with the pullback, I will tend to put it something like this. But to be on the safer side, it's always good for you to leave it like this and capitalize on 1:3, 1:4, 1:5 above. Always target 1:3 and 1:4. So you can see that as the market was just moving well on this particular one too. There's also a need for you to still enter the market again, because we have this break. there's also a need from you, but this one is not a perfect one. Let me not use this one. It's not a perfect one. Ideally, I myself, I wouldn't have entered somewhere here. So what I don't do, I don't recommend you to do it. So, and also, when the market is going, there's also a need for you to pull up your trend line. Remember, your trend line, you can also draw your trend line, and that will be on how to exit a trade. Maybe I will also do a video on that later. Maybe I will also do a video on how to exit a trade using a trend line. So you can also put your trend line here. Remember the video I did last time, a slope trend line and a steep trend line. What is the difference? You can also do it like this, depending on when the market will break the particular trend line. So you can also be capitalizing on this while you are also capitalizing on the counter trend line in order for you to make some profit. So watch that video. That video will help you understand a lot of things. You can also be capitalizing on this counter trend line. Once we have a break of the counter trend line, you can also be buying. All these things I'm teaching you is what I paid for. I paid for all these things I'm teaching you guys. So you can be doing it. You can also go back and do your back test and do the trend line and the counter trend line. For those of you asking about the counter trend line, I hope this will serve as a guide to you to understand it. So once you plot your trend line, preferably from the daily, for 4 hours is for you. Always plot your trend line from the daily, please. 4 hours is for you to keep on executing your trade. This video will not be enough to cover up everything, but these are just tips on how you can be able to understand the top-down analysis. Always plot your trend line. When the market change phase, you plot your trend line again against where it's going, and you also remember to also put in your counter trend line. Your counter trend line, when the market is going against the direction of the market, you put in your counter trend line. This one now is for a sell position. A sell position. You can see that the market was good. The market, as of now, the market is going down, but the market now started pulling up. So when they started pulling, it got to this particular trend line. It broke this particular trend line. If I'm to trade this particular zone now, confirming to me now that the market trend has changed from the weekly, monthly, and daily. So the confidence will be now there. So I can now say, okay, let me take this trade on break of this counter trend and target something lower. Or something lower. But although the market didn't get to this particular zone, because why? We are still in overall bullish trend. We are still in overall bullish trend. So those are the things you have to understand. If we are still in a strong bullish trend and the market is coming down, those who sold all the way from here would have made a lot of money. But the moment the market got here, the market still did what? Pull back and continue in its way. So, but this is also a way to show you guys. You can see, but this one will not be a perfect one. It will not be a perfect one because it didn't give me any space to enter. It was just with a long, although 1 hour may close. If 1 hour may close below it, if 1 hour close below it, I can also consider shorting. So something like this also in the direction where you have your trend line entered, and what you have to do is again and have your counter trend line. If you watch most of my video, this is how I trade. The USDHF you are seeing trade that. This is how I trade most of all the time, and it has been helping me a lot. It has been helping me. So this is all for this video, guys. I hope this video help you guys to at least have the understanding of how to do top-down analysis and how to refine your entry and what to use to refine your entry and chart pattern and all the rest. I hope this video help you to understand it. And still, if you like the way I teach, if you like everything I've done, please, I will beg you to subscribe to my YouTube channel. Give me a like if you like it. Also give me a dislike if you don't also like it. But please comment in the comment box below what I will do to improve in my next video. As you all know, nobody knows it all. I'm here to learn. You are here to learn until we attain the level which I call the CPT, consistent profitable trader. I'm not totally there yet, and I know a lot of traders also are not totally there yet. Why not join me until we grind together and attain the level? I still remain your boy, the Legend FS Academy. Please give me a like. It helps me to do more, and subscribe to my YouTube channel. Bye for now, and remain blessed and keep peeping.